Hi there, welcome to Kneppy Invest and welcome to May 26, 2025. Time is currently 3:22 p.m. So we have just under 50 minutes left of trading today on a fairly warm Brisbane afternoon, about 27 or 28 degrees, fairly unusual for this time of year. I believe the highest temperature for Brisbane, not in winter, but for June or July, is about 29 degrees. The reason I say not for winter is because in 2009, Brisbane had a 36-degree day in August. I do remember that day quite distinctively, even though it is 16 years ago. 36 degrees in August, but it is unusual for it to be this warm this time of year. However, we are moving into the colder part of the month. Not the month, the year, not the month. Well, I suppose the month as well, because the last few days of May should be the coldest part of May, but we are moving into the coldest part of the year. So I do expect some colder days moving forward. But to be honest with you, this time of year in Brisbane is absolutely stunning. And a lot of times you'll see really nice days. It warms up really nicely to maybe 21, 22, 23. Some years we don't see the max temperature drop below 20. That happened about 4 years ago. And a lot of times the mornings are quite crisp and cool and cold because it is drier. So you do get a big range in temperatures from the minimum to the maximum. That's because of the dryness in the atmosphere. Exactly what you see in the desert, a big range of temperatures from the min to the max. So beautiful time of the year in Brisbane, probably a beautiful time of the year in most of Queensland. But I will be living with my parents for the next few months, even longer than that. And they live on the mid-north coast of New South Wales. And funny story, when I was actually living in Oklahoma, I was speaking to this climatologist, and I just told them where I grew up, the mid-north coast of New South Wales. And this person said to me, surprisingly said to me, that has one of the nicest climates in the world. I had never thought about it until that point. Then I thought about it and went, you might be right. However, I've never lived in all climates of the world, but I could see why someone might say that, particularly a climatologist who studies climates all around the world. Anyway, so I can't complain about living with my parents. They do live in a beautiful part of the world. Now onto the market. Interesting day on the market today. I did expect a bit of a sell-off. That was before Trump decided to pause EU tariffs until July 9. So there was a negative day on Wall Street on Friday, down about 1% or so. So I expected a red day today, but not so. And the whole reason why we're just slightly in the green is because Trump delayed those tariffs and American futures are up quite significantly. I think about 1.2% for NASDAQ, 0.9% for Dow Jones. So should have a pretty good day on Wall Street tonight, unless, of course, something else happens, which can always happen. Every single time I start recording, or just before I start recording, I quickly go through trading economics, and majority of these articles are just about Trump delaying EU tariffs, how it has affected US futures, the dollar, the American dollar, gold, and oil. And there's something else about Japanese, and for some reason, Thailand trade gap widens sharply. What is happening there in Thailand? Well, I should read that. It's probably not of anything of significance, but it does make it on the front page of Trading Economics. Okay, so let's go back to the ASX today. Now, actually, before I do the ASX today, I'm just going to do something a little bit different in today's video. So I'll go through the ASX today, look at the best and worst performing sectors and indices, but I'm not going to go through the top gainers and top losers. But what instead I'm going to do, in place of that, I'm going to go through some honorable mentions. So I'll go through the top 5 stocks, maybe 3 minutes each, something like that. But I will have a look at 4 or 5 other companies that did not quite make it into the top 5. And some of those companies were found by me going through the top gainers and the top losers. So not really missing out anything. And then after I've gone through the top 5 stocks of the day, after going through the honorable mentions, we'll have a look at one of your comments, HBK Fortis. Okay, so onto the ASX today. And it's been, I suppose, a relatively good day because it could have been worse. It could have been much, much worse. I was expecting over the weekend that we will be down about 0.5 to maybe 1% today. So a good day for IT. And the whole reason behind that is I do expect a pretty big rally on NASDAQ tonight. So I'd say between 1 and 1.5%, but it could be anywhere as high as 2 to 2.5%. If it's not as high as 0.5%, that would be concerning. Utilities down 2.11%. Don't know about that. Not sure why that has happened. So let's have a look at utilities and why it's down 2.11%. Is it just one company? I'm just trying to think. I do know Origin Energy is down a fair bit. Elders was down a fair bit. Both companies made it into my top 5. So let's have a look. Yeah, it's all because of Origin Energy. Yes. And this one caught me by surprise. So a lot of times when I go through the announcements in the morning, I write down the tick codes, and then if I think the share price is going to go on a rally or rise today, I'll put a tick. So I'll put a tick next to Origin because I thought this was a profit upgrade. But no, the share price is down 4.48%. So sometimes the market can react completely different than what you thought it should and might react. So that is why utilities are down today, is because of Origin, can't even say the word now, Origin Energy. And that is sometimes, or some of these sectors, that is a problem. There is one big company in these sectors, like real estate. We have Goodman Group. So because there's only one big company in some of these sectors, the way that company moves will affect the overall sector. Funny enough, gold's up. So I expected gold to have a bad day because it says gold falls as Trump postpones tariffs on EU. Okay, so let's have a look at gold. I'm going to have a quick look at gold. I was having a look at quick CrowdStrike because remember, was it about a year ago, just under a year ago, there was that system outage all around the world, blamed on CrowdStrike, and we can see a really sharp sell-off in the share price. And I actually did buy on this dip, did not time the bottom. I almost never time the bottom or the top. That's not the point. You can't always perfectly time it. But I did think that was an overreaction from the market. I bought about 250, 260, and the share price has almost doubled. And the reason I'm looking at this is because I'm thinking of selling some of my American holdings in my super just to free up a little bit more cash. So that's in my super, not my super, that's in my superhero account, not my super. In my super are the higher quality American holdings, like the Alphabets and the Nvidias and the Microsofts, those companies that I don't want to sell. CrowdStrike, I'm thinking of it, just thinking of it right now. And that's why I was looking at the chart before I started recording. Anyway, what was I going to do? Oh, gold. I just went on a bit of a tangent. Okay, so gold's down a little bit, but come on, it's just a little bit. Well, it says it's down 0.34%, but we have a green candlestick here. And that is, that's Friday. For some reason, this has not updated. I'm just gonna refresh this because it should be a new day here. That's the weekly. Yeah, it just hasn't updated. So is that just gold or is that all of these? Let's have a look at another one. What about uranium? That hasn't updated. Iron ore, that has updated. So maybe it's just gold. By the way, iron ore is down. So probably a bad day for BHP, Rio Tinto, and Fortescue. And we can turn our attention to that right now with the ASX 20. Flat. ASX 20 is flat. Financials have had a negative day and banks have a negative day. So it looks like the banks have had a bad day, relatively speaking, and probably the iron ore miners have had a bad day, relatively speaking. So let's confirm that by looking at the ASX 20. I'm assuming Wisetech is up a fair bit. It is my top 5 stocks today for a very good reason. So I'm assuming. So 12 up, 8 down. Let's have a look by market cap. And CBA is up. Oh, there you go. BHP's up. Fortescue's up. So even though iron ore is down, some of these iron ore miners are up. Worse before, well, Rio Tinto's down now, though. So, and ANZ's down. So for some reason, people are buying CBA but not buying ANZ, which is by far the better value of the major banks. Sometimes, again, the market just doesn't make sense. And the best performing company is by far Wisetech. Northern Star Resources into the ASX 20. Hasn't been there. Yeah, that's interesting. So it's made its way into the ASX 20. Let's have a look at the list of ASX companies. And who is out? Who's at 21? Brambles. Oh, this hasn't updated probably. So who might be out? Don't know. Well, Pro Medicus is out. Coles is out. Anyway, I'm just rambling on right now. Okay, so now onto the honorable mentions of the ASX today. I'm going to start off with uranium. So uranium had, I looked at the chart of uranium in my technical update video, and it's on the cusp of breaking out. So that's the downtrend line. That sloping dash line is a downtrend line. It's a beautiful downtrend line, by the way. You can just see it going all the way back to start of 2024. And every single time uranium hits this downtrend line, it bounces down again. So it's been holding perfectly. And right now, uranium is on that downtrend line. So this could go either way. This could be confirmation of a breakout if we start to see uranium keep on going up. But if we see a pullback, that will just be more confirmation of this particular downtrend. Now, it does look quite interesting at this point in time, but I said the same thing, or might have been thinking the same thing back in October last year. That looked like there was a pretty good rally happening there, and it didn't keep on going on. And even back in May of last year, it looked like there was a nice little rally happening after a bit of a dip, and that fizzled out as well. So which way is this going to go? Not sure just yet, but uranium companies doing great today. In fact, I do have a uranium watch list. It's in alphabetical order. So let's have a look at some of these charts. We have next gen. Oh, that looks not quite. Oh, it's definitely, all these are going to be looking better. Paladin, I'm still not convinced with Paladin's chart. Boss Energy probably is one of the best ones. It looks looking pretty good. So that's Boss Energy is at almost at a 10-month high. Deep yellow up 15.66% today. Not as good as Boss. ERA. What about Bannerman? Lotus started to turn, and Peninsula is actually down. There you go, Peninsula. One of the most disappointing one of the most disappointing uranium companies on the ASX, and might be one of the most disappointing companies on the ASX. Peninsula Energy, uranium's gone a bit of a tear, short-term tear, and Peninsula Energy's share price is going the opposite direction. So if I had to judge any of these charts, I'd probably go with Boss Energy. Don't mind Next Gen, Paladin. There was also that Infinity Resources. This is a small company, and it's up 29.63% today. There you go. So sometimes it plays to put your money into the smaller players because you get more leverage, that sort of thing. Anyway, so that's uranium companies having a pretty good day, and uranium is on the cusp of a breakout. Coming in, no. We're not doing a countdown. Straker Limited, down 10.5%. Update on Nike contract. Do you reckon this is, or think this is, negative or positive? It's negative. Well, hopefully you can understand why it's negative without even opening up this particular announcement. Now, I knew it was going to be negative because I actually did read it before the market opened, and they just said here, Nike has advised Straker that it will not renew its legacy services agreement beyond its current term, which concludes on 15 December 2025. It does slightly negatively affect Straker. Of course it does. So Nike represents 3.3% of the company's revenue. So negatively impact revenue by $480,000 and adjusted EBITDA by $290,000. So it's not a huge part of Straker's business, but I suppose it's important enough that they did release an announcement. Now, funny enough, Nike have been going through some problems recently. Let's see if this AI thing can do. No. Why Nike is struggling. The Nike situation is crazy. Haven't really been following it all that much. There we go. Nike to post worst revenue fall in 5 years on stagnant something. The real reason behind Nike's 27.5 billion loss, that was September last year. Nike share price dropping along with profits as it faces new competition. I don't know. So Nike is under, not sure, strain right now. So maybe this is one of the reasons why they're not renewing this particular contract, not because Straker's not doing a good job, just because Nike has to save some money. If you have a look at the chart for Nike, oh, this is a weekly chart. It has been looking ugly for about 4 years. Share price got to a peak in May 2021 of around about $180. Now the share price is 60. Share price has gone down 67%. And before that, the chart looked really good. So is this good value with Nike? Is it? I've turned this from a Straker to Nike. I actually haven't had a look at Nike for a long time. P ratio 20.4. You know what I'm going to do? I'm just going to have a look. Now, the share price has decreased 67% for a reason. I'm just going to have a look at the overview. I just want to see what the revenue, so barely a blip in revenue growth. Revenue growth over the last 10 years has been 4.7%. Earnings per share at 5.6%. They do have a dividend yield 2.8%, which is quite nice for an American company. Payout 51%. A return on equity 40.1%. Return on invested capital 28%. So something's happening from the efficiency or capital efficiency ratios to the growth. Gross margins 43.8%, operating 10.4%, P ratio 19.9. So I'd probably rather that P ratio to be a little bit lower based off what we're looking at. But I'm just going to have a quick look at revenue and income over the last 10 years just to see the trend. And yeah, the profit in the last 12 months is down. So revenue was quite not revenue. Profit can be quite lumpy, but revenue has been increasing quite nicely from year to year, apart from 2020. And now we are seeing revenue fall. The last column here is the last 12 months. So if we turn our attention to the semi-annual, actually, no, go to quarterly, because we can have a look at quarterly. So yeah, the revenue for Nike has been dropping consistently over the last few years, but on a quarterly basis, and the profit as well has been dropping. So something's going on with Nike. Maybe people don't like Nike shoes anymore. Who knows? But is the market overreacting? Is this just a short-term blip in the Nike model? I don't know. Okay, another company that I think I should just mention is Nufarm. Nufarm released a negative report last week. Share price, I think, the share price dropping has come to an end. I do expect a bounce there. They wanted to be a bounce today, but it hasn't quite followed through. But the share price has dropped about 50%, maybe not 50%, say 45 to 50% over the last few days. Now, a couple of things to mention here. One of the directors or someone did buy a fair few amount of shares in Nufarm. That was announced on Friday. Forget who this was. This was Greg Hunt, bought 155,000 shares worth $128,000. So maybe that is good timing. So that could be a good sign that Greg Hunt believes the market is overreacting. The company also received an aware letter from the ASX in regards to that massive drop in share price. And the company responded that the numbers they did announce at the half-year results, were not worse than expected. And they're not talking about themselves; they're talking about to the analysis. So the company did not publish earnings guidance. And one of the questions that was given to Nufarm was, if Nufarm is covered by sell-side analysis, the earnings forecast of those analysis. And in essence, Nufarm said, well, our results weren't that different from the expectations of the analysis. So why has the share price dropped a lot? I think they did give some reasons behind the possible reasons. Give some reason behind the possible drop in share price. It was somewhere here. It was very long. Here it is. So please provide details or any other explanation Nufarm may have for the trading in securities following the release of the results announcement. They gave 3 reasons: downward pressure on the fish oil prices. Not sure about that. Nufarm's net debt and leverage levels being higher than prior corresponding period, so 12% and 9% higher, and Nufarm's announcements of its review of its seed technologies business. I just don't think the share price is going to drop over 40% because of those 3 reasons. I do think there is something else at play here. And we did see a lot of really big volume coming in. And I just think there is a chance with 1 or 2, maybe even more, 1 or 2 fund managers getting out and they're just selling on market. So we've seen really big volume. In fact, the volume has continued through today. Now, I do think we have seen the bottom, and I'm thinking of buying some shares in Nufarm to catch a bounce. The sort of bounce I'd be looking for is above $3. If we get to above $3, that'll be a nice 25% rise in share price over a short period of time. I could take that. I could definitely do that. So I do expect a bounce. The shares are definitely oversold, and I think the selling is coming to an end. But a very risky trade if I do that, because the share price could keep on falling from here. Been a very negative reaction from the market, but I sometimes should go with my instinct here, and my instinct is saying there's going to be a bounce. I think the selling will come to an end, but I'm fearful that I will be wrong. Not fearful, but I think there's a chance I could be wrong. A little company called Wiseway Group. Who's heard of this company? Yeah, I have. I've known about this company about 4 or 5 years. They're a freight company. A few years ago, maybe 3 or 4 years ago, share price went on a tear, and then the share price went all the way back down. Now, this company released something quite positive a few months ago. When was it? Maybe it was the half-year results. It could have been the half-year results. I looked at it and went, oh, that's not bad. Now, the company did release a bit of an update today. And by the way, this company has a market cap of, I'm assuming now, share price has risen a little bit. I'm assuming about $30 to $40 million. $30.12 million after 9% rise today. So keep that in the back of your mind when you read some of these numbers. So one of Australia's leading integrated freight and logistics operators. Now, the margins of this company are quite small. They are pleased to provide a trading update for the 10 months ended 30th of April, following a strong first half, recording $148 million in group revenue for the 10-month period. So a lot of revenue, but because of low margins, you don't see a lot of profit from this company. So if this company has a slight miss in revenue, that could really negatively affect the profit. So that's a problem with having really low margins. It takes the smallest thing to see your profits just dwindled away. But really positive update from Wiseway Group, talking about strong performance in imports, US operations continue to scale, sort of just positive sentiment when it comes to this space. But in saying all that, they also mentioned somewhere, or was it another company? Maybe it was another company who just mentioned a bit of, I thought it was this company who just mentioned in this space there is a bit of headwinds. So they're doing really well, even though there are headwinds in this space. So maybe it was a different company I'm thinking of, because I can't see that written here. Anyway, so let's have a look at the chart for Wiseway Group. Now, I'm pretty sure this company is illiquidly traded. We can actually have a look right now. So 51 trades today. Now, if you go through the trade history, there's some days where there's limited trading happening. I wouldn't call this overly or significantly illiquid, but definitely do see some big gaps in trades. So between the 24th of April and the 5th of May, there was only 1 day traded. 1 day of trading in this company. So it is illiquidly traded. Now let's have a look at the chart. And in fact, you just have a look at the chart, you can see it's illiquidly traded. This is the chart of an illiquidly traded company. Now, it wasn't illiquidly traded when share price went on a tear back in 2020, 2021. Share price went to a high of 44 cents and then dropped all the way back down to about 4 cents. But the chart actually doesn't look half bad right now. And yes, the share price did bounce when they released their results towards the end of February. In fact, on that day, share price rallied 56% and then pulled back. That could have been a nice little pullback to buy. Anyway, so the chart doesn't actually look half bad, but again, illiquid. And finally, honorable mention, we've got Focus Minerals. Focus Minerals up, share price up 89% on either the sale of or acquisition of Laverton Gold Project. Now, this company is a producer. So if you open up their cash flow report at the end of April, you'll see some numbers in the cash flow report. And whenever I see Focus Minerals, I move on to the next company because nice receipts, 38.3 million, but operating cash flow negative 7.2 million. And that does not include property, plant, and equipment and exploration and valuation. So free cash flow negative by about $11.5 million. So I don't think at this point there's much, there's not, what's the word? There's not much profitability in their production right now. Now, the other reason why I always move on from Focus Minerals is the debt. So this company has a markup. Now, this is after, by the way, this is after today. This company has a markup of 119 million right now. Now, this is going to look really interesting in a second. Actually, I'll show you right now. So Focus Minerals has sold their Laverton Gold Project to Genesis. Now, they have received $250 million in the sale of this particular project. So $250 million receiving, and the markup is 118.9 million. So you might be saying, whoa, hang on. So they're getting 250 million, but the markup is 119 million. Oh, I'm going to buy this company because they're going to be swimming in cash. Hold your horses, because if you go to the Appendix 4C and go to Section 7, Financing Facilities, they do have $187 million in debt. So you have to add that to the markup. So this company has enterprise value over $300 million. But still, $250 million means sort of an enterprise value of $50 million. But I think the market is worrying, maybe not worrying is the right word, but the market just sees that this company in production is not viable. It's not viable because they're bleeding through so much cash. Now, maybe they could pare back some of the spending, like development, maybe that will decrease. I don't know. Don't know this company well enough. You can also see interest and other costs of finance paid $2 million per quarter. So we're talking about $8 million a year. If they get rid of their debt, that would help their financial position as well. So let's have a little chart for Focus Minerals. And yeah, so actually, in actual fact, the chart actually didn't look half bad before this. And then also our share price has popped up significantly. So yeah, actually doesn't look half bad. And I think that's because they sold this. I'm assuming that's a pretty good price for this project. I'm assuming their shareholders are quite happy right now. Okay, now on to the top 5 stocks of the day. And we have to start off with another gold company. I'm a little bit biased with this one. I am a shareholder of Kaiser. Reef, share price up 9%. I was hoping it could be up a little bit more, get through the sellers at 18.5 cents, but I'm going to take share price up 9% on. So they bought a mine, Henty mine. Is it Henty? Henty gold mine from Catalyst. And the acquisition was finalized, was it 10 days ago? 2 weeks ago, we'll say. And they have just announced their first weekly gold pour. And I think this was pretty good. So this is first 10 days of Henty ownership. 1,200 ounces from Henty. That's in 10 days. So we're talking about where gold prices are right now. We're talking about over $6 million in 10 days. Now, that's not taking into account, that's just revenue if they sell it at these prices. And that's not taking into account their costs. And I believe their costs would be just under $4,000 per ounce. So they're getting some nice profits out of these. We're talking about a few $1 million of profit within the first 10 days, maybe $1 million or so. So I haven't done the numbers just yet, but I thought this was a pretty good update from Kaiser Reef. And yeah, one of the reasons I actually did buy this is because I thought the market wasn't fully realizing that this company could become or could generate a fair bit of cash with this purchase of this particular mine from Callis. And Callis has put a lot of work into that mine. So I do think Kaiser Reef got this mine fairly cheap. So I'm thinking there is a lot of further upside for Kaiser Reef, particularly if gold prices at least go sideways, but better going up. Now, the chart of Kaiser Reef has been looking okay. Not the best. It's not the beautiful, perfect uptrend. One thing you notice, and the other thing I actually was interested in this one, is just the increase in volume we've seen. And in fact, today we've seen the highest volume. That's a good sign as well. So even though the share price is not breaking out, that's a good sign. Some really big volumes coming in, and I'm hoping we're going to see some fund managers come in and become a part of this register. I really like to see the share price get above 20 cents and stay above 20 cents. So even though the share price hasn't really broken out just yet, I think there is a chance that the share price of this company will be significantly higher in a year's time. So this is not a trading position for me. I do think I've, where did I put this company? Was it in my trading? Let me just have a look. No, I didn't put this in my trading portfolio. I put it in my small caps. Yeah, that makes sense. Anyway, so that's Kaiser Reef. I think this is a pretty good update, and I have no complaints about it. Also got an email about this from Next Investors. So if you like that sort of website, they had a really nice email about Kaiser Reef. Coming in at number 4, we have Elders, agricultural company. Not my favorite type of company. Released a half-year results today. Share price down 6.1%. Now, I actually didn't have a quick look at this one. I'm just going to have a quick look at Capital Brief just to see if there's any mention. Health Minister says HealthScope will not be bailed out by taxpayers. Not sure if anyone remembers, HealthScope was on the ASX, and HealthScope is one of the reasons why there's a few companies' share price dropping because of HealthScope. I forget which companies they are. Accent Group shares down after Chan transition plan announced. Now, sometimes when Capital Brief says the share price up or down, you have a look and the share price is virtually flat or down just a little bit. So that's just noise. In one single day, that's just noise. So typically I just ignore those sort of things. I'm just having a quick look. McGrath Nickel appointed as HealthScope receivers. Which companies have exposure to HealthScope? I forget. I'm terrible. Wish my memory was better. Nufarm shares recover. No, they haven't quite recovered yet. Origin, here we go. Elder shares tumble despite profit jump. Now, yeah, that's a little bit of a, I shouldn't say trick, but the first thing you notice, if you just look at the numbers in isolation, you might think, wow, what spectacular results from Elders, because revenue up a little bit, 5%, but statutory profit after tax up 190%. We're all going to be rich. Underlying earnings per share up 135%. We're all going to be rich. What a fantastic results by Elders. So this is one of the reasons why I don't necessarily look at profit or earnings, because a lot of times you have one-offs. Sometimes you have massive swings in earnings. Another reason why I tend to focus first on revenue, also have a look at operating cash flow, free cash flow, that sort of thing. I just want to see what Capital Brief is saying and why the share price might be down. Context. However, there was a decline in gross margins. Now, I've noticed a link. Whenever you see gross margins dropping in a company, that's when the share price can take a little bit of a tumble. Notice this quite a bit over the last, say, 3 or 4 years. So this is another reason why I'm focusing more and more on gross margins. I used to focus more on operating margins, net margins, but now I'm looking more at gross margins. And you can actually read a lot just by looking at gross margins. Anyway, so when I actually did open this up, I thought, I'm not sure which way the share price is going to go because I didn't know the expectations at all. Now, I do like to have a read of these because they talk about climate in Australia, weather conditions in Australia, and I'm just a nerd like that. Talking about really dry conditions or retail products margin impacted by increased localized competition exacerbated by dry conditions in South Australia and Western Victoria. The most significant decrease is attributable to crop protection gross margin resulting from lower sales and lowest gross margin profit percent. Wholesale products have had a better time than retail products. And then we talk about the financial year 25 outlook. This is the one I read. Talking about the average winter crop is forecast, despite a late start to sowing in parts of the country, which is partially mitigated by extensive geographical presence. So I do actually like that part. I do think that if you are an agricultural company, you have to be geographical diverse. I think it's an absolute must. So if I did give Elders a tick, it would be because they do have extensive geographical presence. Favourable conditions are expected across many parts of the country, while South Australian parts of Victoria have remained dry for a prolonged period, prompting widespread dry sowing in these regions. They also talk about Australian livestock, how that's pretty good. The problem with this and these sort of companies, agriculture companies, is a lot of their performance is dependent on the weather and climate, and that can swing wildly, and the Bureau can be quite wrong in their climate forecasts. So even though they might say there's a chance it might be wetter than average, that might be like a 55% chance, because we're talking about the climate. We don't fully understand all the climate drivers. Like we know El Nino, La Nina, that sort of thing, but they're not perfect in understanding what our climate's going to be, particularly in all these little portions of the country. So sometimes you hear farmers complaining about, oh, the Bureau said it was going to be wetter than average, but I didn't have much rain, but not far from them, places have a lot of rain. So that's a problem with climate and weather. It can be very hit and miss sometimes, unless it's a really big event. Anyway, so I do like these sort of reports, even though I don't like these companies. I just like reading their outlook and that sort of thing. So Elders, share price and chart. This is probably not looking good. No interest in this one. Funny enough, so I mentioned earlier that I wasn't sure which way the share price was going to go. Share price actually opened up. In fact, it opened up 1.82% on open, and then probably was up about 2 to 3% after 2 minutes. And then the selling came in force in the third minute. Yes, the third minute of trading. Share price dropped 4.57% in that third minute. So is this just a fund manager selling out on market, just dumping the shares on market, and that sent the share price down a fair bit? It could have been, and that's why the share price is down 6%, just because of that one fund manager selling. So maybe the report wasn't that negative. But gross margins down, that is a little bit of a negative thing. Otherwise, let's go back to the daily chart. Otherwise, have no interest in this company unless it's a trade. And 550 might be a nice trade for Elders, maybe. Let's have a look at the weekly chart. Oh, geez. Was Elders really that high? Geez. Why would 550 be nice? Yeah. So below 550 would mean the share price would be at a 7-8 year low if it gets below that level. So nice support level. We have seen the share price rally off that level a few times in the past 8 years, but remains to be seen. Coming in number 3 is the update that are completely wrong. Origin Energy Financial Year 25 Guidance Update. Got this one wrong. I put a tick. I thought this was going to be positive. I thought the share price would be higher. And the main reason I thought the share price would be higher was because this is an upgrade. So I must have missed something in here. Origin now expects financial year 25 energy markets underlying EBITDA to be 1.3 to 1.4 billion compared to the previous guidance range of 1.1 to 1.4 billion dollars. Now, I have a feeling what I've done here is I just assumed that was the company. Oh, that was the whole company. So I just looked at the numbers and went, oh, this is an upgrade. And then I completely missed. I should have kept on reading. Looks like there was a bit of a downgrade for Octopus Energy. What a name, Octopus Energy. Origin now expects its share of Octopus Energy underlying EBITDA to be a loss in the range of 0 to 100 million compared to previous guidance of a positive contribution of up to $100 million. So this must be in the UK because they're talking about UK weather, of all things weather. So another company that can be affected by weather. And I knew this because I once worked at an energy company in America, Tulsa, Oklahoma, and this was on a trading floor. They had climatologists and meteorologists, and what they were doing is they were trading energy futures, that sort of thing, based off the forecast of the winter period. So if a winter was going to be warmer than normal, then that would be actually quite negative for gas prices, because people use less gas when it's warmer than average in the winter. And looks like that might have happened with Octopus Energy. Key factors driving the lower financial year 25 guidance include unseasonably warm weather across March and April in the UK, as well as one-off impacts under discussion relating to the government's price guarantee subsidy from the energy crisis of 2022. UK recorded the third warmest April since 1884, which resulted in a significant decrease in electricity and gas volumes. So, bad update from Octopus Energy. They also mentioned why the energy markets had a good update. So overall, this probably, based off the market reaction, was negative when I thought it was going to be positive. So it does teach us, that sometimes we can be foolish in our thoughts. And if we have a look at the daily chart for Origin Energy, it's, not interesting, this chart either way. Look, the share price dropped a lot. When was that? Oh, 7th of April, of course, really no trend. So this is not a trend killer or anything. It's just a negative day for Origin Energy because of octopuses, which one? I don't know. Wisetech coming in number 2. Share price up 4.7%. We're in the closing auction right now. Share price up 4.7% on an acquisition. I actually saw this acquisition announcement and I was thinking, it's just another little bolt-on acquisition, fairly small acquisition, whatever. And then I opened up not the presentation, I opened up the media release and went, whoa, this is not a small acquisition. So Wisetech are renowned for making all these really small acquisitions. In fact, there's one part of the presentation where they compare this acquisition to all their previous acquisitions. So this was or is a $2.1 billion acquisition. Now, it's very important here. $3.30 per share in cash, equating to enterprise value of $2.1 billion. The reason I'm saying that is because this is a publicly listed company called E2 Open Parent Holdings, ticker ETWO on the New York Stock Exchange. I did have a look at this company, E2 Open Parent. I had a look at the chart first of all. What was it? ETWO. Chart did not look good. Yes, chart has fallen a fair bit. If you have a look at the weekly chart, so this company listed back in 2020, share price reached a high of about $14.50, is now $2.57. So this could be considered an opportunistic buy by Wisetech, buying a company that could be beneficial for Wisetech in the long term at nice, cheap prices. I also had a look at the company in ETWO in FinChat. Also had a read of their most recent quarterly, and this company has been under a little bit of pressure. So I think it was a transcript. Yeah, I read the transcript. They had no slides or presentation, which I hate. Release a presentation. Jeez. Anyway, so the main thing I got from E2 Open Parent Holdings is they've been under a little bit of pressure over the last few years. And the reason I say that is if you have a look at their revenue, it's been dropping. So this is the last 3 years. We've seen the revenue drop last 2 years. Last 2 years, not 3 years. What else was dropping? Companies' income is, have a look at this. Have a look at this. Just wait for it. Wait for it. Wait for it. What do you think their profit's going to be? And I guarantee you're going to be wrong. Unless you looked at this, you're going to be significantly wrong. In the last 2 years, this company's profit has been negative $1 billion. In fact, the last 3 years, negative $650 million, negative $1 billion, and negative $660 million. I saw that and went, what the hell's going on here? How can you have such a massive loss? Impairments. It's all impairments. This company is actually free cash flow positive. Actually, they might not be. They're definitely operating cash flow positive. Let's have a look to see if they're free cash flow positive. We'll get rid of the debt because that really distorts things. Not the debt, the income. We'll get rid of the revenue as well. So this company is actually operating cash flow and free cash flow positive. So massive losses the last 3 years. So what's been going on? Impairments. That's what it is. It's just impairments. They're writing down a lot of goodwill, heaps and heaps of goodwill. And I did have a read of the transcript for the last presentation or the last quarterly, and looks like a new CEO was put in place. And he was a little bit positive that things are starting to turn around. So there is a chance, based off what I've read, based off some of these numbers, that the worst is now in for Wisetech, and this is a really solid, good acquisition. Now, the other thing I mentioned is the enterprise value. So they bought this at $2.1 billion of enterprise value. And the reason I say that is because this company has a lot of debt. Now, if you just have a look at the market cap, 884 million, but they have a fair bit of debt. So that's why the enterprise value is significantly more than the market cap, because of the debt. So they still have a lot of debt. So there's a little bit of negative thing for this company. Now, Wisetech acquiring this through debt, I'm not the biggest fan of that. But if I preferred either acquisition through debt or acquisition through capital raising, it depends on the valuation of a company. If a company is really overvalued, like if Wisetech share price was like $300, I probably prefer the company to do capital raising. But if a company is undervalued, I'd probably rather them do debt. But I definitely think this could be quite beneficial for the company, and I do think this could be an opportunistic acquisition. Now, I mentioned earlier that this company has been renowned for making a lot of small acquisitions. Here we go. In fact, there's a couple of slides here just mentioning that. So over 10 years of acquisitions, 55 acquisitions, 25 countries, 50 plus applications, 16,000 customers, $1.2 billion in consideration, which is sort of like the acquisition price. And E2 Open, 20 countries, 30 applications, 5,600 customers, $2.1 billion in enterprise value. So this acquisition dwarfs all these really small acquisitions, which I thought this was going to be. So the market likes it, although some of this rise in share price could be just because of overall sentiment in tech today. And the daily chart has definitely turned a little bit more positive for Wisetech. A lot of volatility in there just because of, what's his name, Richard White. But definitely share price got as low as $68 not that long ago. And finally, company coming in at number 1, EROAD. I used to be trading this company about a year ago, maybe. Share price up 14.94%. I was thinking of buying this on open, very close to buying this on open. I sort of wish I do, because it opened at 87 cents and closed at $1. Well, gee, that's a nice little 10% gain, actually 15% gain in a fairly short period of time. Or the previous close was 87 cents. Oh man, I should have been paying a little bit more attention to this one. That's insane. Why would you be selling out on open on this release? Was it just one share? It was one share. Okay, it was only one share. So that's a little bit different. And then, yeah, in my opinion, the real open was 90 cents 4 seconds later. 4 seconds later. Okay, so why is the share price up 15%? Is because of their pretty good report. By the way, this company has a market cap of 140 million. I'm going to guess 140 million. 187 million. Okay, a little bit off there. So 187 million. And they had a really nice update. So delivering on strategy with sustainable, profitable growth. And I was like, ooh, this is pretty good. In fact, I was even thinking when I was going through this, maybe I could just buy some EROAD shares for the longer term. So this would be part of my small cap portfolio. Smaller companies are not willing to trade, but I wouldn't consider high quality just yet. I do like that space. And this company could fit into that category. And the share price is considerably lower than it used to be. And this could be another step in the right direction for this company. And a really nice report from EROAD. Substantial improvement in free cash flow position, rose to $16 million compared to $1.3 million. So beautiful cash flow there from the company. What else? Revenue, 194.4 million from 182 million. I probably would prefer a little bit greater growth in revenue, but I am now being a little bit picky. So 6.8% increase, and recurring revenue up nicely as well, 6.1%. So I suppose if I'm being unsatisfied with 6.8% rise in revenue, I should not be saying nicely for analyzed recurring revenue. EBIT climbed to 5.9 million compared to 0.2 million, and profit increased by 2.2 million to 1.4 million. So the company is now profitable. But you notice a massive change or difference between free cash flow and profit. So that's one thing I'm just going to look at, is why they could be capitalizing a lot of their research and development in, because we don't have any, actually, I did not know they also included a presentation. I just had a look at the first and second pages here. I did not know this particular announcement went 108 pages long. Wow. So funny enough, I did not go through the whole presentation. That's a lot of pages. Oh, this is a report. Funny enough, I had no idea this was actually results, because it doesn't even say it, does it? They did mention financial 25 financial results and webinar details, and I have a feeling that would be that. Yeah, that's today. Okay, there you go. I'm stupid. I am stupid. I had no idea. I thought this was just an update. So you could always go through. Where is it? That's remuneration. There we go. I just want to see. Oh no, I've gone way too low. I'm looking for, here it is. I went way past it. What I'm looking now, I'm going to go to the cash flow section. Here it is. So operating cash flow positive 43.2 million. However, it was 52.9 million last year. And I just want to see investing activities. So 13.4 million in capital expenditure, and also 14.9 million in intangible assets, which is capitalized research and development, which is an ongoing cost. So even though the operating cash flow is quite nicely, the free cash flow is a little bit lower, but they're still free cash flow positive. That's the most important thing. So they've become profitable, free cash flow positive. So things are moving in the right direction for this company. So let's have a look at the chart for EROAD. And this is a possible breakout. The one thing I'd like to see is that some nicer volume coming through. So the volume has been quite weak today compared to what you might see, but it's also a New Zealand-based company, and maybe there's more trading on the NZX. But, and you can just see by the buyers and sellers, you can see the sellers is someone at $1.05, and the next one is $1.10 and $1.14. There's not a buying selling with this company. So there is a chance maybe the shine will glow off over the next few days and the share price could pull back. Okay, so one question. HBK Fortis says, hey Kneppy, what's your opinion on Capral, CAA? Looks to be breaking out with an increase in volume, and in my opinion, it is undervalued. Now, I'm a little bit biased against Capral just because quite a few years ago, they had a really bad period because of suppressed prices in alumina or aluminium. So it really affected the company. And in fact, if you have a look, let's see if we can find this out. If you have a look at their income, revenue, and we'll put in gross margins as well. See if we can find out when that was. So we're talking about 2017 through to 2008 or 19. So the company was actually loss-making in 2019. Revenue wasn't really going anywhere. Decreasing gross margins as well. In fact, gross margins kept on dropping to 2022. At least a profit started to grow as revenue grew as well. So I remember this company back then has been affected by prices of aluminium or something, and I think that was influenced by China, I forget. And you sort of can see that just with the chart. If you go back to that period, the share price and the chart of this company was really crappy and down. You can just see, yeah, really down the dumps from about 2012, in fact, to 2020, and the share price just took off. And in fact, the share price is still going forward. So beautiful weekly uptrend from 2020. Share price has increased from 350 to 1158. This company's had a really nice 5-week period as well. Look at that. So there was a little bit of a false breakout on the 26th of February. Share price pulled back, and we've seen share price go on a really good run the last few days. In fact, the last few weeks. So otherwise, Capral, market cap is $193 million. And if we just have a quick look at the most recent financial year, revenue of $604 million, profit of $32.5 million. So company is not that expensive if you believe that sort of profit. So yeah, so really low P ratio. Revenue growth is okay for this type of company. Earnings per share over the last 5 years is really high because of that bad period back about 7-8 years ago. Dividend yield is okay at 4%. Payout is probably nice, what I like to see it at 21.3%. I don't think you're going to see, I was going to say you probably won't see a higher return on equity and return on invested capital, but they are quite nice at about 20%. Gross margin is 30.6%, operating margin is 11.5%. I'm just going to have a quick look at return on equity and return on invested capital just to see what they were back about 7-8 years ago. Because there are times when that sort of period can affect your opinion on a company, and you are going to be biased. So I just want to have a look at capital efficiency, return on invested capital, return on equity. Were they pretty low that period? Yeah, they were low. In fact, according to this, return on invested capital only started in 2020, but return on equity was really low prior to 2020, and all of a sudden it's just jumped up. So that could be because all those tailwinds back then have come to an end. So, in fact, I'm going to do ChatGPT. Why did Capral have a bad period in the 2010s? Oh, man, look at me typing. I was right. Aluminium, had a very difficult period during the 2010s due to a combination of structural, economic, and competitive pressures. Cheap Chinese aluminium or aluminium imports. There we go. Declining Australian manufacturing sector. The years of financial losses. Yeah, we already know that. High operating costs. Volatile construction activity. I think it was mostly cheap Chinese aluminium imports. So I'm assuming that has come to an end. And I am biased against this company just because of that. And if it's come to an end, my biases are playing against me. Okay, that's all I have for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.